The 2013 credit outlook for transportation and public infrastructure bonds is stable. Demand-driven projects like toll roads, airports, seaports, parking are largely spurred by the economy. In the US, while growth is expected to be somewhat tepid, that is baked into our analysis. In Latin America, where growth is expected to be strong, that is baked into our analysis. Availability-based projects where the strength of contracts and the stability of counterparties is important is factored into our analysis. One of the things that we do at Fitch is we develop base cases, which is the expected performance based on historical precedent and future expectations. We take that base case and apply a combined downside, which is called the Fitch rating case. That allows us to assess the volatility in these transactions and assign a rating, and we feel that all these ratings will largely be stable. The 2013 credit outlook for energy project financings is also stable. Contracted thermal, renewable, and oil and gas projects that benefit again from the strength of contracts and the stability of counterparties are fine. Merchant power projects that have suffered from the dislocation in the natural gas market are where we have some concern, where even hydro projects, which are high on the dispatch curve, have been negatively affected. The one issue that affects the market overall is the rising cost of environmental compliance. That's something we have to yet to figure out and evaluate the implications for these projects. The privatization of water assets is not necessarily a long-term trend. Water in the US is largely managed in the municipal space. We have seen some assets transferred to the private sector. The private sector can add value through better operations and more effective value added to the user. However, it is important that they have strong contracts that ensure that performance meets those requirements and that the risk-reward balance is maintained appropriately. We do not expect significant municipal assets to move to public-private partnerships. On the other hand, new supply and new distribution may very well be placed in the private sector's hands. The 2013 market outlook for project finance is positive. Infrastructure and project finance assets have stable, long-dated cash flows that are well suited for long-term bonds. The issue we face globally is that all markets are not equal. The US is well positioned and can accept BBB paper. The emerging markets are interesting. Latin America is well positioned with countries like Mexico, Brazil, Chile, Colombia, and Peru, with developed and increasingly deeper and more developed markets.